All right, so on to the second part of this question. What is usually the first thing we do or what, not usually, but what up to now has been the first thing we will do in one of these questions. The reconciliation of operating profit to net cash flow from operating activities. So that operating profit figure we just figured out. Operating profit is the answer you get when you do your trading account. You get your gross profit from your sales, that's cost of sales, and then take away any other expenses, maybe add on some other income as well, and you get your operating profit. Okay, so that operating profit is an accounting profit. There's some stuff that you add on and you take away in coming to your operating profit, which is not flows of cash. Okay, so stuff around credit sales, around credit purchases where you haven't actually received the money or paid the money. Depreciation is an entirely accounting concept. It's not an it's an expense. It's not an outflow of cash though. So we need to basically undo those and make this sort of accounting profit that this is closer to being a cash profit. Okay, so like I said, some of the stuff which some of the non-cash stuff there is credit sales, credit purchases, and we see those in the balance sheet, in the current assets in debtors, and in the current liabilities in creditors. So let's just start with debtors maybe. So the debtors at the end of last year were €175,000. Okay, so at the end of last year I was owed €175,000 by people I had made sales to. Okay, so that 175 would have gone into my sales in my profit and loss, but I hadn't actually received the cash. Okay, when do I receive the cash? This period. So of that 175 grand, I put it in as sales, and then it goes in as profit in 14, but I actually received the cash in 15. Okay, so I'm trying to make this closer to being an actual cash profit. So what I'm going to do is add on that €175,000. Okay, because I actually received that money this period. Now, this 190,000 though debtors that I'm owed at the end of this period, I would have put that into my sale. So that is included in my operating profit. But I haven't received that cash yet. Okay, I'm not going to receive it till next year. So I should take that away from here. So I'm adding on the cash that I actually received this period, and I take away the cash that I'm not going to receive until next period, because I'm trying to get the actual cash that I got this year in 2015. So I add the 175, I take away the 190, I end up subtracting the 15,000 then, the kind of net amount. The one I would do with debtors then is stock. I think the kind of logic behind this one is a little bit more difficult to track. So generally what I've always done is just follow the treatment from debtors, because I can kind of get my head around the debtors really quickly, really easily. But the stock then, I would just follow the same treatment. Okay, so you add on last year's stock figure, you add on the 195,000, and you take away the 225. Okay, I kind of spoke to you before about the kind of logic behind that, so I'll just leave that. So plus 195, take away 225, that's 30,000. All right. So again, it's minus 30,000. All right. There's nothing there in current assets of cash, bank deposit, government securities. No, that doesn't affect us here. Down into creditors, and then trade creditors is pretty much your mirror image of debtors. So I owed 102,000 at the end of last year, so I'm actually going to have to pay that money this year. Okay, so that 102,000 that I owed at the end of last year, I'm going to have to actually pay that cash this year, so it's minus 102,000. Okay, on the other hand, this 125 grand, All right, I'm not going to have to pay that money till next year. Okay, so I'm going to add that 125,000 on. All right, and that ends up being plus 23,000. All right, check. You can see that, yeah. So, anything else here? Tax, bank overdraft, interest due. No, we don't. We don't do that here. The other one we saw a lot on the ordinary level questions is depreciation, and we generally just went last year's depreciation, take away this year's depreciation, or this year's accumulated depreciation, take away last year's accumulated depreciation. That's this year's depreciation. We're still going to make adjustments for depreciation here. There's just, as well, a little bit more to it, and they tend to interact with profits and losses on disposal of assets tends to come up on the higher level question. So what I would say though is the depreciation itself is just given to me in this adjustment. Okay, so depreciation charge for the year in arriving at operating profit was 45,000 on plant and machinery and 35,000 on equipment. Okay, so they were subtracted in coming to operating profit, but they're not flows of cash. So I'm just going to add those two numbers back. All right, so depreciation on plant and machinery, that's an add back of 45,000. Depreciation on equipment, that is 35,000. So I'm just doing these as I come to them. I'm kind of mixing together things I subtract, things I add back. If you look at the solution in the book, they kind of group all the things you take away together and the stuff you add together. You can do that if you want, but it's fine to just kind of mix them in like I'm doing here. All right. So then the other things, as I said, which tends to come up on the higher level ones is profit and loss on disposal of assets. And I think we have two disposals here. So we have one where we make a profit and one where we make a loss. So just going down through it. Yeah, so machinery which cost 80 was sold during the year for 66. So I need to figure out, is there a profit or a loss on that? Okay, so it costs, so let's just figure that out then. So just give myself a little bit more space. Yeah. So so just profit loss on machinery. You can see that, yeah. All right, so the cost is 80,000. All right, it's was sold for 66, but it's not the cost I compare it to the selling price. It's what it was worth. It's the net book value that I need to compare to what I got for it. Okay, so I'm going to need to take away the depreciation on that machinery. Okay, and this is where this kind of comes in that I did in the previous examples where I would have looked at the difference between this year's and last year's depreciation. So if you look at machinery, there was depreciation last year of 20, and there's accumulated depreciation this year of 60. So it looks like there was only 20,000 euro depreciation in 2015. But if you look, the question told me that there was 45,000 depreciation on plant and machinery. So I'm told there's 45,000 in the profit and loss, but there's only a 20,000 difference in accumulated depreciation. Okay, so why is that? Well, the difference is the depreciation on the disposal, because once you dispose of that asset, you wouldn't include its depreciation in accumulated depreciation anymore. So you would get rid of it. Okay, so that's where that difference is coming from. So the depreciation on the machinery then is the 45,000 that was charged, take away the difference between these. So take away the 20,000. Okay, so it's 25,000 that must have been the accumulated depreciation on the machinery. All right, so we're going to take that away from the cost, and that's going to give me 55,000 net book value for the machinery I got rid of. All right, so it's looking at what I would expect. I would expect accumulated depreciation to go up by 45. It only goes up by 20. The difference between those is 25,000, and that's the accumulated depreciation you're getting rid of out of your accounts when you dispose of that machinery. All right, so that means net book value of 55,000. You're told you got 66,000 for the asset. So it was worth 66. Sorry, it's worth 55. You got 66. So that's a profit of 11,000 on disposal. All right. So the book value, what you thought it was worth, was 55. You actually got 66 for it. So you made an 11,000 profit when you got rid of it. Okay. So that 11,000 would have been added on as other income because it's profit, income into your operating profit. So remember, what you're doing is you're undoing that non-cash stuff. So you're actually going to take that 11,000 away. Okay, so profit on disposal. All right, so that 11,000, like it's comparing proceeds to this net book value. Your net book value is after depreciation's taken away. So it's an accounting concept. It's not an actual cash profit. All right. We'll deal with the fact that we got 66,000 in proceeds in the cash flow statement. We have actually received 66 grand in cash. That will come in later in the question. But this profit figure here, that's, as I say, an accounting idea. It's not actual real world kind of cash profit. All right. So, as I said, we've another disposal then as well. This one's, well, it's a little bit easier here because it just tells me equipment sold during the year incurred a loss of 12,000. So it actually tells me what the loss figure was. So loss on disposal would have been subtracted income into your operating profit. So you're going to add it back to undo it. Okay, so that is a loss on disposal. So if you add and subtract all of those, you should get, in the end, 193,100. And what are you doing here? A reconciliation of operating profit to, so here's what this is, net cash flow from operating activities. All right, so again, started with the operating profit. That's the answer to my previous part. Made the adjustments I've seen before in respect of debtors, stock, and creditors. Like I said, I think debtors is the easiest one to remember the logic behind, then follow the treatment for stock because it's also a current asset. Basically do the opposite thing for creditors because it's the mirror image of it. But if you want to kind of learn off, increase in debtors means you do this, decrease in a current liability means you do this, by all means do that. Or if you want to kind of think through it yourself your own way, by all means do once you're getting it right, obviously. Up till now, we just compared this on last year's accumulated depreciation to get the depreciation to add back. In this one, it's actually easier to hear. They give me the numbers to add back, but there's a little bit more here in getting this profit on disposal or loss on disposal if you need to figure it out. Okay, they just gave us this one as well, but I suppose this 11,000 was a little bit more work that we haven't seen before. But 193,100 is your answer there, and then I will go on and do the actual cash flow statement in another video.